All right, everybody, welcome back to the Matty Moolah Show. So we're going to be talking about April dividends this time. It was an okay month. I wasn't too bad. I think from an options perspective, I did a lot better. So if you guys are actually interested in learning a little bit more about my options, cover calls mostly, let me know. I haven't done too many of those, so I kind of left that up to GW and Dave when they were kind of doing a lot of that stuff. And I mostly just kept on to the conviction plays that I have and the dividend plays. That's mostly what I've been kind of keeping it to. And yeah, so I think, there's an opportunity for that to be shared. But overall, it's a pretty good month. The portfolio's rebounding pretty nicely. The markets are doing well. We just had Palantir earnings. So that alone should be like an $8,000 uplift for tomorrow. How long that sustains, beyond me. But we also have a good earnings report coming out tomorrow for RKLB, which is another high conviction play that I have within the portfolio. So overall, things are looking up and up. The market's holding up in there pretty well. You continue to add capital to the portfolio as I see fit. But specifically for the month of April, I think it was around the $2,000 mark in terms of actual dividends. And then I made about $1,100 worth of options income and about $100 or so from YouTube. And there were some other things that I did that I haven't actually billed for yet. While I did some of the work in April, I haven't billed for it as per se. So I won't really include that. And I'm still trying to decide if I want to include some of that portfolio, or I guess it's more sponsor income, in these sorts of videos anyway. So overall, it's about $3,300 a month if you're not including, salaries and stuff of the like. So pretty good. Can't complain there. I didn't get too crazy on the options. Like I said, I generally try to keep it like at a 5 delta from a cover call perspective. And so I know some of you guys are crazy. You like to do 30 delta or 20 deltas and really try to maximize that income. But the way I view it is these things are golden gooses, and I'm not really trying to get rid of them. So without further ado, let's just hop right into it and look at specifically the portfolio, how we're kind of looking. And here's kind of the breakdown of it. So just under $2,100 for the dividends total in the month of April, $1,100 for options income, $105, $106 for YouTube income, getting me close to the $3,300 mark. So let's hop right into specifically what companies paid me. So we have a continued investment in Devo that pays out monthly. It's a covered call ETF that has about 30 odd positions in it, and it's done relatively well. And then same with JEPI. JEPI is a covered call ETF that's run by JP Morgan. This one's held up pretty good with the recent volatility that we saw in 2022. Also pays a monthly dividend of about $340, $350, depending on the quarter. Other ones that have kind of come through is Realty Income. That's continued to be a great performer within the portfolio in terms of dividend income. So up to the $123 a month mark. So I wouldn't be surprised if we end the year closer at a run rate of about $130, because I think every month this is growing by about 70 or 80 cents. So I wouldn't be surprised by the end of the year getting close to that $130 a month run rate. Pepsi paid last month, so no updates there. Royal Dutch Shell paid last month, so no updates there. This one's a rather new one it's not new per se, but pretty good run rate from SPY. And you're getting about $500 a quarter, so you can't complain with that. And generally speaking, the first quarter's dividends on SPY are generally the lowest. And so with that, I'm kind of looking to get about $2,200 from SPY for the year. And that's about 10% of the dividend income for the portfolio. So that's pretty impressive, knowing that, granted, it is a big piece of the portfolio, in terms of what I actually am able to calculate. There's other things like 401ks and pension plans and stuff like that I can't calculate a dividend income from. But for the part that I can, SPY is a pretty good chunk of it. Now, I've also thought about consolidating a little bit more, and obviously you dividend investors are going to cry at heart, but I've thought about consolidating the Devo and the JEPI and moving it into the SPY position. And I know a lot of you guys from a a dividend perspective, income perspective, are going to cry inside. But, I would lose a little bit. But at the end of the day, that 40 or 50 grand, I don't know how much it is really, going into SPY would probably increase this number by 33 to 40%. So I would lose, a couple $100 a month in terms of dividend income, but this on its own would do rather well. And it would be a quarterly payment as opposed to a monthly, but it's not something I've pulled the trigger on yet. But as I lean more and more towards long-term growth and really trying to get from, the beginning 7-figure mark to, closer to 8 figures is kind of the goal at the moment. It doesn't really make sense for me to be holding covered call ETFs. While it's nice and it makes me feel good, warm and fuzzy in case I ever lose my job or anything like that, at the end of the day, it's more likely in the long term, a position in SPY is going to be more beneficial. So Stag Industrial, we have about $82 for that for the month, so can't complain with that bad boy. XYLG did not pay a dividend in the month of April. We got a double dividend in the month of March. So we got an early dividend in March and then a late dividend in March. And so they didn't end up paying out something in April. And it happens every once in a while. You can see the same kind of happen in February. So BHP paid its semi-annual $336. That's pretty good. Considering I think the position when I bought it was around $2,200 or $2,400. So over 10% yield on cost just from this monthly payment, and it's about $680. So 25 to 30% yield on cost on this one. So pretty good. Can't complain. JEPI, $96 for the month of April. And this is specifically the portion that's coming from my Roth. So overall, I'm making a 400 or so bucks from JEPI. WDS, which is Woodside Petroleum. It's an Australian company. These were shares that were spun off of BHP when they did the merger back in 2022. This is $93 and can't complain with this. I would like to get this up to 100 shares, write some covered calls. So we'll see how this ends up for the rest of the year. WP Carry, these would be my last dividend payments from WP Carry, as I did sell it off to invest into SLG or SL Green. And that's another story for a different day. I'd love to have Chris Patel on for that one. Chris is a big inspiration. And him, Steven, and a few others have worked pretty diligently to look into the SL Green, which is a commercial real estate play in New York, and recognize the potential for equity growth in that. And it's also coupled with a pretty decent dividend for SLG, which isn't why I'm investing in it. More so investing in it for a rebound play. But I thought it would be prudent if we're looking into growth. WP Carry, great performer. I could see it getting into the $90 range again, as it has in the past. But, in the 70, mid-70 range, it just didn't really seem like it was going to go to a 2x or 3x anytime soon. Maybe over the course of a couple years. But WP Carry on its own would probably be kind of stagnant, just collecting the dividend, which there's nothing wrong with that. So I sold it and moved it into SLG, where I think within the next year or two, it's likely to have a double, and it has the potential to go back up to $100 a share. So potential 3-4x from where I have it today. So it is a little bit more risky, but that's how the portfolio is these days. No risk, no reward. Well, I guess in this case, no risk, 5% reward if you're looking at treasury bills. But even still, those have their complications as well. We have a little bit of love from Keurig Dr. Pepper and Philip Morris, which I didn't check these positions, but they're rather small anyway, on the order of $1, $12 or so. McCormick, I haven't checked this in a very long time, so I should. Have a $116 payment from Fundrise, a $62 payment from Cardone Capital, and actually a $50 interest payment from some, this is more of a personal savings. I was originally going to start buying websites and stuff, and so that's what this column's for, but it's just a savings account at Amex. And it's about $51, and now I've added a little bit more money, so it should be running at about $65 to $70 kind of going forward. This is where I'm currently storing my personal residence payment for my house if I decide to go ahead and go forward with that. And otherwise, it might be, if I don't buy a personal residence, I continue to rent, just depending on what's going on in the world. It could be me purchasing more rental real estate or something of the like. I'm very bullish on that for the long term. So, like I said, I'm really just trying to kick it into a gear. If I really wanted to, the portfolio is rather expansive. I could be making 60, 70 grand a year in dividend income if I really wanted to push it, right? And really just wanted to focus on it. To me, that's great. Those incomes are cool. But to me, it's like, this is a true opportunity where I'm still rather young to make an opportunity to take those risks to get somewhere where it's a true lifestyle impact changer, right? Going from 1 million to 3 million over the course of, say, a few decades, isn't really going to change the trajectory of my life. It's really not going to change where I'm at in terms of, lifestyle. But if I take some risks here, like things in Palantir, Rocket Lab, investing in Amazon's, Google's, where they have the 2x, 3x potential in the shorter term, next 5 years is kind of the shorter term for me, or the medium to long term, which is kind of looking in the 7 to 10 year range. And you look at things like Rocket Lab and Palantir, they have the opportunity to 10x, 50x, those sorts of opportunities. That's where you start to get to something that really can put you in a different lifestyle change. And then if I want to, I could take out the $1 million or $2 million and put it into the covered call ETFs and say, yep, I got my 70 grand a year, 100 grand a year dividend income, and the rest is kind of play money or continue to invest and try to get it to, 20 million or 30 million. So it's just a different way to kind of think about it. From your guys' perspective, you might think of a little bit of a crazy person, but you guys have a repertoire or a database of what I've been able to post over the past 6 to 7 years and how I've transitioned my portfolio into where I was. And, originally, you guys know, I was investing very much heavily for dividend income. I was scared to lose my job. I was afraid, the 2014, 2015 timeframe that I wasn't really going to make it out alive. And it wasn't really until I got to the 2018 2019 timeframe, after surviving several layoffs in the industry that I'm in, which is oil and gas, that I really started to understand this is a pretty big chunk of change. And it wasn't really until the pandemic and the opportunities that presented themselves in 2020 where I was able to go from, a couple 100,000, to really getting in, punching distance of that 7-figure mark. And it was like kind of an eye opener how you were able to just put your head down, invest, and hold the line rather than just give up, and 2x, 3x your portfolio in the matter of a couple dozen months. And, I see the potential of that. I lived through that, and I know it's an extreme scenario, but I could see that happening on a more muted sort of case, even with what's going on right now. When things do finally pivot, I could see things exploding in value. Things like TQQQ, Rocket Lab, Palantir in the long term. And it'll take decades for it to fully play out. But I'm here to consistently look into that versus just collecting a small dividend. And, it's not to say that that's not the way to go. It's my personal perspective. It's personal finance. And that's how I've kind of transitioned. And no longer am I really fearful of losing my job. But if I do, I have this nest egg that I can transition into, from these speculative positions or SPY into an SCHD or something that yields a 6 or so % dividend or income stream like a JEPI or Devo. But in the meantime, I'm looking for that growth. I'm looking for that rebound. And I'm looking for the things that are really going to 2-3x. And I don't really think that the things will 2-3x when the market does kind of hit its second gear or third gear from what's going on with these interest rates is going to be in the covered call ETF space or the dividend yield space, right? Or the dividend growth space. So anyway, that's just my thought. I'm not saying that that's wrong, especially for those folks that are closer towards retirement and they don't really have as great of an income potential as I do. I do relatively well as an engineer and I save a lot of my income. I'm fortunate to be single at the moment to be able to save that. So fortunate and unfortunate to be single, I guess you could say. But in the meantime, I'm taking advantage of that to collect more and more dividends, or just more and more of a portfolio value. So I have that fortune. Some of you guys might not. And so you might want that dividend income earlier. You know, maybe you're really struggling paycheck to paycheck, and getting that that phone bill paid for by your investment in Verizon or AT&T is really going to be something that energizes you, right? And then I can't tell you what to do, right? I mean, it's a personal finance. You have to realize and do what's right for you. But this is just my journey, and I'm really glad to be able to share it with you guys, and really hope that this video gives you a glimpse into what I'm doing, what I'm dealing with, and my investments. And of course, if you guys ever have any questions, you can hit me up on Twitter, YouTube. Comments are open as well. And really looking forward to sharing with you guys in the future. So until then, I'll talk to you guys in the next video. Cheers.